Good morning, good afternoon, and good evening, everybody. Welcome to another edition of the Learning Lab. My name is Kostya Zolotuski, and as part of the ISTAT initiative to continue our networking and having to move into a digital world, we've introduced the Learning Lab, where we dive into a particular topic relevant to the industry in great detail, and ISTAT chats. All of these different sessions you can find and register for the future ones. And with the current one, I have a pleasure of introducing Nils Hellstrom, who is not only a friend, but somebody that I have a great deal of admiration for. He has been truly a thoughtful leader and a luminary in the industry in terms of thinking of our business in mathematical and algorithmic terms, of analyzing how we think about cycles and the value of aircraft and how they behave over time. Nils started out his career at Saab and decided that regular engineering was too easy and he needs to explore financial engineering. And from the very start, he was part of the PK Air Finance, which was originally started by a Swedish bank, PK, and then moved over to Credit Agricole. Like all great investors, Nils learned the hard way. In 91 through 93 downturn, he has had to reshuffle his portfolio. And like training fighter pilots, you have to break a few things. Nils broke a portfolio and then recovered. And the lessons he learned are many of the lessons that made PK over the decades to come such a success. He implemented and understood some of the challenges around aircraft finance in how you analyze it and plan for it. And now he's clearly becoming a doctor of investment and analysis in aircraft finance, looking at the current downturn. So with that, I will turn it over to Nils to talk about how he sees the pathology of the current situation and how some of the possible cures can be applied. Nils, please.
Hi, everybody, and thank you so much, Kostya, for that. Okay, so Dick Forsberg kicked off this series of learning labs a couple of weeks ago, talked about the airline landscape after this corona crisis. And then last week, Bryson Monteleone talked about appraising aircraft in a challenging market. Now, appraisers, they have a tough time because their appraisals are used in prospectuses of memorandums for securities, and they are used for checking covenants and loan agreements, and they are used in checking impairments on leases and so on and so forth. So an appraiser cannot just come up with a number they feel like. They have to have a very well underpinned view of this. And it's really, really tough today because there are very few transactions that are taking place for naked aircraft. So where do you get your data from? But the people who are trading and leasing and financing aircraft need to have some kind of view of the value of airplanes and where the values may head out into the future. And if you think of values as what can I catch for this airplane that I happen to own if I sell it for cash next week, it's going to be very, very difficult because the market is so frozen up now and illiquid that I think you should think about the values more like what could I pay for an aircraft today and expect to make a adequate risk-adjusted return over the lifetime of that asset. So I think you have to think of values as the present value of a income stream that you can derive from that asset. And this way, you don't really need that liquidity right away. So I'll talk about aircraft values in this session, and keep in mind that this is the kind of approach I take to valuations. But first, let's start with the pathology, the cause of the difficulties we are facing right now, the COVID-19 pandemic. I'm not going to talk a lot about the pandemic itself because I think you all have an overdose of information about this. Suffice to say that we have about 13 million cases identified to date worldwide, and the infection rate per day is not stopping to increase. And I don't know how this is going to play out. It could be very bad, and the infection rate could continue to go up, or it could taper off, and it would be a good scenario. Nobody knows. This is unknowable. And I think that it's absolutely futile to try to make predictions how this virus will affect our industry. So instead, I think we should focus on mapping the process around the pandemic and how it affects the industry, and try to model outcomes based on various scenarios. So to help the structuring of our thinking in terms of this pandemic, I wanted to just break down the pandemic into 4 phases. Phase 1 is the outbreak of the virus and the pandemic and the contagion. And the reaction here is a mandatory confinement and lockdown, where the purpose is to try to avoid overwhelming the healthcare systems. And then we come into phase 2 as the contagion peak is behind us, and there's a gradual lifting of restrictions. And that phase is characterized by a fear and reluctance. And then in phase 3, this is when the contagion has been eliminated, either by mutation of the virus or herd immunity or a vaccine that has come onto the market. This is bound to be, in a deep economic recession. And then, it could be that we have gotten used to socializing digitally. And maybe instead of taking vacations, we take staycations where we, spend our leisure time closer to home. This phase, and mind you, this is when the contagion is eliminated, will be characterized by dented spending power among both individuals and corporates. And this is also going to be characterized by changes of habits. Maybe we're going to, choose to do a Zoom meeting with our relatives or a Microsoft Team meeting for business purposes, rather than taking that flight over to see our customer. And then phase 4 is when the economy starts to recover and we go back gradually to normality. And in that phase, I think that the inherent desire we humans have to travel will manifest itself, and things will go back to normal. The timeline for these 4 phases, I have absolutely no clue. And I don't even know if we are in phase 1 or phase 2 at the moment. I think we are maybe straddling those 2 phases a little bit, but it's also possible that we will go into phase 2 and then have to step back into phase 1. So how does these 4 phases now impact the airlines? So the symptoms for the airlines, which will depend on the severity and duration of the pandemic, would look like this, I think. First of all, in phase 1, the airlines are burning cash while the airplanes are grounded. The revenues are anemic. And to limit the bleeding, the airlines have to hoard cash, save cost, furlough people, fire people, try to seek subsidies, seek rent and debt payment deferrals, raise debt, mortgage your assets that are unencumbered, slots, gates, airplanes, frequent flyer programs, whatever it is, and then hopefully pump in some equity. In phase 2, now the airlines start to fly again, but they're still going to be burning cash while the airplanes fly, because the revenues will be weak, load factors will be iffy, yields probably are going to be pretty low, and the cost will go up, because now you have to pay for fuel, and you have to pay for labor, and you have to pay way fees. So the airlines will still need cash. And then you have the increased burden of heavy liabilities for the debt you're taking on, and the rents you have deferred that would have to be, caught up. And the chances are that the airlines will seek permanent relief and have to restructure. And this restructure can be either in court or out of court. In that process, capacity will be shared, liabilities will be marked to market. The equity will be squeezed, and creditors will move into the position of equity, the unsecureds first, and then the secureds. And the risk premium for financing will be higher. So that is also going to increase the cost. Then in phase 3, now the pandemic is gone. Planes are flying. Nobody needs to be afraid of flying anymore. However, the problem is the airlines that did survive without restructuring their liabilities and maybe shed some capacity, they would be facing fierce competition from airlines that did restructure, that now have much lower cost and are much more efficient. And there will also probably be airlines that will start up taking opportunity to get cheap lift and cheap labor from the lift and labor that was discarded by the restructuring companies. So there could be that this is going to be a contagion of restructurings across the industry. And then phase 4 is convalescence and healing. This is the gradual return to balanced capacity through permanent retirements and lower production rates. The revenue passenger miles will reach 2019 levels at some point. And the lower cost base of airlines and the increased efficiency and productivity would probably mean that the industry is going to return to health, and new equity and new debt will be pumped in and will fuel this recovery. There could also be some consolidation. It's not only the airlines that are going to suffer here. Leasing companies are going to face headaches. The deferrals, mark to market of lease rentals, defaults and rejections of leases and repossessions are going to be costly and time consuming. And I think the same equity squeeze that airlines may face are also going to hit the source. And the increased risk premium for financing are clearly going to be a burden. Now, leasing companies that are owned by diversified corporates and banking institutions may have an easier time to weather through the storm, but independent ones will have a tough time. Debt holders in general, bondholders, banks, will also face deferrals, mark to market of especially unsecured debts, impaired collateral values, and repossessions. Aircraft manufacturers clearly are going to see order cancellations and deferrals of orders. They will have to face costly production rate cutbacks and probably postponement on new programs and cutbacks on research and development. And there's going to be implications for the complete supply chain. Now, next week, on Tuesday, Kostya will have a session on the impact of the pandemic on OEM. So please make a point of calling in for that. And then maintenance repair shops will suffer, of course, because there's going to be less flying, meaning there's going to be fewer shop visits, and then increased scrapping will lead to lower parts prices, and so on and so forth. Okay, now let me spend a few minutes on the cycle. We all know that this industry is cyclical. And at the ISTAT conferences, we love to discuss the cycle. Where are we in the cycle? Where is the cycle heading? Okay. And what is the cycle? There are a lot of things that are cyclical. We have aircraft values are cyclical. Airline profit margins are cyclical. Storage of aircraft in the desert are cyclical. Orders are cyclical. And airline credit ratings are cyclical. And airlines default in clusters, according to the cycle. So how do we define the cycle? Well, I've always thought about the cycle as a mother cycle, something that drives the other cycles. And that would be a cycle that looks at the balance of supply and demand in our industry. So if we start with the demand first, demand is, in our industry, is traffic. Revenue passenger kilometers or revenue passenger miles per year. And we look at the growth in that traffic. on an annual basis. And the plot since 1980 looks like this chart here. You can see that the traffic growth has been fluctuating, quite unsteady. The average is maybe around 4.5%, 5%. But there's been dips where the traffic has contracted. The projection that I'm showing on the right was a projection we did in December, so that was before we knew about the pandemic. Then what is the supply then? Well, the supply is, the airlines talk about supply as the ASMs, available seat miles or seat kilometers. Now, the thing though is that counts also seats that take off empty. But if you have a seat taking off empty, that is potential capacity, potential supply. So I think it's better to look at and think of supply as the growth in seats, the number of seats. And that is, of course, the number of aircraft multiplied by the representative seat count in each type of aircraft. So if you look at the annual growth in the seat count, it consists of production and delivery of new seats, which is the red line, and then minus the retirement of old seats, and then you get the net seat growth. And the funny thing is that passenger kilometers is the dimension here is kilometers, is the distance, and for seats it's just a count. Okay, so these are apples and bananas. But if we now take the annual growth, we get the percentage. So we kind of collapse it to one dimension, and now we can compare the two as apples to apples. And if we do that and put these two charts on one graph, you get this picture here, and that's the green is the traffic growth per year, and the red is the seat growth per year. And here I've colored the times when traffic grew faster than capacity. I color that green. And when capacity grew faster than traffic, I color that red. Green is good because when traffic grows faster than seats, then that means that a lot of people want to get on the airplanes, and there aren't enough airplanes to meet that demand. So airlines raise ticket prices and they make a lot of money, and they want to buy more airplanes. So values of airplanes go up. And in the red periods, it's exactly the opposite. There's too many airplanes around. And of course, in the green times, airlines make a lot of money, and so their credits become stronger. Okay, so we looked at traffic and seat growth, right? That's like the derivative of the total traffic and the total seat capacity. So now if we go back and we sum up the areas that are red and green here and go from the left to the right and say that the green is plus and the red is minus. If I do that integration or summing up and accumulate the areas, I get this chart. And this is an interesting chart. It shows two things. One is that there is a growing trend line in this chart. That means that every seat that is in the install base of the aircraft fleet produces more and more seat miles every year. Why is that? Well, there are two reasons. Number one, the load factors are getting higher. The airlines have become very good at filling their airplanes with yield management systems, et cetera, et cetera. And the second reason is that aircraft spend more and more hours per day in the air. And that is thanks to two things. One is that with low-cost carriers, which have proliferated over the last 20 years, if you have a cheap enough ticket price, you can say to the passenger, well, you'll have to board at 2 o'clock in the morning, or you have to arrive at 4:30 in the morning at an inconvenient time. The other reason why utilization has increased is that the growth has been stronger in the long-range segment than the short-range segment, which means that, for long-range aircraft, they can spend the night in the air, and the passenger can sleep through that night shift and still depart and arrive at convenient hours. Now, the long-term trend line, the green one, is not that important for us ISTAT people because, uh, you know, aircraft values and credits and profit margins, there is enough stability here to kind of adapt to this slow and gradual and predictable trend. What is interesting is the swings around this long-term trend, the ups and downs, because they happen so quickly that the capacity doesn't have time to adapt. There is a lot of inertia in the capacity system. The manufacturers cannot start to build aircraft much faster overnight. It takes time to change production rates. You have to go through the whole supply chain. It takes about 18 months to build an airplane from the time you cut the first piece of metal until you roll out of the hangar. So there is a response time. Same thing with scrapping. You don't scrap airplanes overnight. There's a limited capacity among scrapping facilities. So this cyclical trend is super important. And if we just isolate that from this chart and look at the cyclical component, we get this chart here. And that is what I call the pent up relative capacity shortage surplus cycle, PERCS. And again, this is what the cycle, in my mind, looked like in December of last year before we knew about the crisis. This cycle, when it's on top of the horizontal axis, it means that we have peaks in the cycle, and when it's below, it means we have troughs and downturns in the cycle. And these troughs and peaks affect aircraft values, airline profit margins, default clustering among airlines, orders, and retirements. In fact, I could take all these parameters and overlay on the same chart, and you would see an absolutely perfect correlation, except, of course, that the deliveries will be completely negatively correlated, because what happens is that the airlines, they always order airplanes in the peak of the cycle, and then after 2 years when they get delivery, they are at the trough of the cycle. But that's just the nature of the beast. Now, we like to give these troughs names. So I've called the first trough in the history of jet aviation the OPEC 1 trough, and then there's the OPEC 2 trough. This is when OPEC managed to quadruple oil prices overnight, and they created a supply shock in the oil and oil prices that went up very high, and it had a big consequences for the world economy. And then you had the Iraq War, 91, and then you had 9/11, and you had the financial crisis in 2008. And it's good to give these troughs names, because then as an investor you can blame some outside event that you obviously couldn't foresee, rather than taking the blame yourself for having made stupid investments. You can see also that from the last trough that was in 2009 to present, there's been a very, very long stretch of recovery in the cycle. And that has been, I think, driven by two things. One is that the manufacturers were quite smart this time around, or that time around, I should say, because they didn't cut back production violently. So they didn't create a big shock in the system. And at the same time, they were lucky in that there was a very strong traffic growth for many, many years from 2009 to 2019, where, especially in Asia, there was a lot of people emerging rich enough to fly. So traffic growth in Southeast Asia and China was just phenomenal. And that absorbed all the capacity that was being built by the manufacturers. One thing that I wanted to mention is that this cycle, the PERC cycle, can we predict it? Well, of course we can't predict it, but I would say that to some extent, it is partly predictable in the short run. And the reason for this is that while I don't think anybody can predict traffic growth in the short run, you can do it long term, but the traffic growth next year and the year after, as opposed to the previous year, it's very, very hard to tell. But the capacity growth, you can predict with some degree of certainty, simply because the production system has so much inertia. And there are only 2 or 2.5 manufacturers. So you can basically go out and count how many planes are being built in Toulouse and Seattle. And then it's not going to be changing overnight. So there is partial predictability. And I think of it as, playing blackjack in Las Vegas. If you count the cards, you don't know exactly what's going to come out of the dealer's hand. But by counting cards, you can account for shifting odds. And I think it's the same thing here. You can account for shifting odds. You know that when you are in the peak phase of this cycle, it's more likely it will turn down and go further up, and so on and so forth. Think of this as a pendulum. Okay, so this is the PERC cycle, the way we looked at it, or I looked at it, in December of last year. Then the pandemic struck. So now, say and we have to look the patient in the throat and see what happened, okay? So to predict this cycle, we have to do a projection of traffic growth, and we have to do a projection of seat growth. For 2019, we have the numbers. We know what the traffic growth was. It was pretty okay. It wasn't as high as 2018, but it was pretty all right. Seat growth was unusually low in 2019, which was good for the industry. And that kept aircraft values very high. The reason, of course, for this slow seat growth was that there were 300 MAXs grounded, and there were another 450, I think, built and not delivered at Boeing during the grounding. The traffic growth then for 20 and for a few more years ahead, I've taken from IATA's latest prediction. I think that's the latest. And then there's a return to normalcy with an assumption that the traffic will be back at 2019 levels in 2023. And then on the capacity growth, we've just looked at the what the OEMs have announced in terms of production rates. I mean, they've all announced cutbacks, and if you take those numbers, you get these numbers that I have in the table here for the next few years, and then a return to normalcy in the long-term trend. And if I do this, I get the chart on the top right there. You see that that trend line, how all of a sudden it starts to go upwards very rapidly, and that is just not going to happen. So the analysis here kind of falls apart, because the productivity of aircraft seats is not going to go up that much. That red line is supposed to be very, very stable and slow moving, and if anything, it should actually taper off in slope a little bit, because you can't go up to more than 100% load factors, and you can't fly airplanes more than 24 hours a day. So there's really a limit to how much that line can grow. And the cycle below there, the PERC cycle, looks really weird. And so something is not computing here. And what I think is amiss is that this time around, about 40% of the fleet is temporarily idle. The airlines have said, okay, we're not flying, but this is not going to last forever. This is temporary. So we're going to put the airplanes on the ground near the home base, but we have absolutely no intention to sell or dispose of these airplanes. And as soon as the flying resumes again, we're going to put those airplanes into the system. And so they're not offered for sale or anything like that. So I think that to account for that temporary idle capacity, this is another scenario where we take into account that 40% of capacity is just temporarily grounded. And we say that there's a massive reduction in capacity this year, and then there's going to be growth next year and the year after, where all these airplanes are going to be put back into the system. And if I do that, and please remember that this assumption here is based on the IATA's growth forecast, which says that the viruses should be gone by the Q4, which is no certainty at all. But it's a scenario. So if you do that, then you get a cycle in the chart to the right below that is quite interesting, because it shows that the trough of this cycle, which will hit sometimes late this year or early next year is about the par with the 9/11 down cycle and maybe the OPEC one down cycle. So nothing much more dramatic. And then there's going to be a return to normalcy over the next 6, 7, 8 years. But then, of course, this was the optimistic scenario where the virus is going to blow away. And it could be that the virus has a second wave. And if we assume that, and that there's going to be no more traffic growth in 21, so it's going to be the same as in 20, then things look much, much worse. And you can see that cyclical trough at the chart on the lower left corner is very, very deep, far deeper than anything we've seen previously in this age of jet aircraft. So what is the damage now to aircraft values that we may face here? Well, we can compare to previous cycles, and I've looked at how CMVs for various aircraft types have been impacted by the amplitude of these down cycles. And if we assume that we would have about the same damage, and we apply this COVID-19 cycle, the one that wasn't too bad, where the virus will go away in Q4, then the picture for an A320, 7 years old, would look like this. So the green line is the value projection we would have had if we had no pandemic, and the cycle would have been more of a normal cycle. Whereas the red one is when we account for that COVID-19 down cycle. And here you can see two things. One is that the value dips down very, very dramatically early on here, but then over time will kind of go back to where it would have been. So I don't think that there is necessarily going to be a damage done to residual values far out for aircraft that do survive this pandemic. And then the thin lines are kind of just expressing uncertainty around the valuations, because these valuations are quite uncertain. And if we look at how that COVID-19 cycle value prediction compares to the green line, we have this chart that shows the relative damage. And today, we are about 16, 17% down on the value, and it's probably going to go down further, into next year, 22% maybe. This is a guess, again, assuming that the virus goes away in Q4. So this is just one possible scenario. And then how does that compare to what appraisers say? Well, I took a table from ISTAT that they presented a couple of weeks ago. On top of that table, you see the A320. It's a little bit older, and they talk about the 15% CME change. Now, so we're in the ballpark, and what you can see is that, if you look at other appraisers, they're widely and wildly apart, both in terms of level of their opinions and the relative suffering between different aircraft types. And clearly, different airplane types are going to suffer differently. I think the A320 is a narrow-body aircraft, is relatively current technology, and it's not going to suffer that much. I'll come back to that in a minute. It's very, very hard to see what values really are, because there are no real transactions to go by to guide opinions. But we're going to soon see what the value impact is when we see real leases, clean new leases, not purchase leasebacks, sale leasebacks, because that's a combination of the sales price and the leaseback price. But if you look at clean leases, they should reveal valuations, because of what I said earlier, that the value is really the present value of a rental stream for an aircraft. And just to make sure, we can triangulate here and make sure we're in the ballpark, ISTAT said that that A320, where the CMV change was 15%, they think that the rental has gone down by 27%. So if I take an 8-year lease with a BB- credit, and I drop the rental by 27%. That diminishes the present value by about 15%. So it is kind of consistent. And when you think about the impact of the crisis on values, just think of this. So the value is the PV of the rental stream. Now knock off X months of rental in the very beginning of this lease, and see what the present value impact is when you use a discount rate that reflects the risk in this. And I think you can figure out, at least a ballpark of what the value impact would be if you make the right assumptions about how long you will have to think of this aircraft not earning any revenue. And you will also then understand why newer aircraft will be affected less severely than old aircraft, because old aircraft have much less life remaining, and therefore those X months that you take out in the beginning of that rental will be a bigger proportion of the remaining life, and therefore older aircraft will be hit harder. Okay, so just to remember, aircraft will not be physically harmed by this crisis, and values are driven by the surplus and shortage of capacity. And the capacity will be right-sized over time through scrapping. Surviving aircraft will not see impact long-term on the residual values. Okay, then I want to show you what I call the aircraft funnel. So you could put all the airplanes in the fleet in a funnel, and you take the newest and the most efficient aircraft at the top, and the oldest, the oddest, the least well-maintained, and the biggest airplanes at the bottom. And then you have like a pecking order, which aircraft are going to be in demand and which ones are going to be surplus. And this ranking, this pecking order is something we could debate forever. And I'm not at all claiming that I have the answer, but this is just a stab at it. And then this wrecking ball here will knock off the bottom of this funnel, and the depth of this knockoff will depend on the severity and the duration of the pandemic. So there is going to be a sizable proportion of the fleet that will be destined for the desert, but we don't know exactly when that's going to happen. So we talked about aircraft values. Now, what about airline survival, which is just as important, especially if you're a lessor? So if I do the same analogy with the cycle, and I look how the cycle, the perk cycle, has impacted the survival probability of airlines in previous cycles, I get the following chart. The chart shows the probability of survival over time for an airline that is rated B-. That's a green line. And that would be if you have the cycle we assume pre-COVID. But putting in that COVID-19 cycle into the equation, the survival curve would be stressed. And you can see there after 1 year, the gap there is the increase in the 1 year probability of default. And you go from a B- to a triple C-, so three notches down, theoretically. However, this is very, very tricky because no airline can make money survive with no revenues for an extended duration of time. So I think you have to look at survival in 3 states. And you go through this flow chart and you say, does the airline meet its financial obligations? Yes, okay, fine, then you're a survivor. If it doesn't meet its financial obligations, you say, does the airline restructure out of court? Okay, yes, it does. So it's a restructured survivor. Or it doesn't restructure out of court, it restructures in a court proceeding, in bankruptcy filing. Now, then it goes again into the restructured survivor bucket. Or if it doesn't succeed in restructuring, it will liquidate and die. But this flowchart is something maybe you have to go through several times. So if you are a survivor now, maybe that's not going to last, and you would have to go into the restructuring mode. And even if you do restructure and you become a restructure survivor, if the pandemic lasts long enough, that you're not going to stay there. You may have to go through a second restructuring. So what is the prescription now? Okay, so let's see what the doctor ordered. And when we look at the medication here, I want to highlight something that I think is important, and that is that the dosage of this medication will depend on two variables. One is what I've shown on the horizontal axis here, the duration and severity of the pandemic. The longer it lasts and the more severe the pandemic, the higher the dosage. But the other dimension to this, on the vertical axis, is the liquidity and the solvency that the airline had when we entered the pandemic. Clearly, the more cash you had and the more equity you had, the longer you can sustain a bad period, and the less medication you're going to need. You're going to need cash, and equity is important because the solvency you have means that you probably can monetize hidden values in aircraft and other assets you have, and then convert that into liquidity. So just think of this, the dosage depends on these two factors. So the medication is, first, you take Band-Aid, that is deferring rent and debt service, and you borrow money. So you mortgage everything you have and you try to raise as much cash as possible. You save cost, you can furlough employees. And this will not heal the patient, but it could alleviate the bleeding in the short run. But if it gets bad enough, you will have to go into the next level of medication, which is a blood transfusion. This is pumping in new equity. But this is horrifically expensive, and it's not covered by Medicaid in many countries. In other words, in some countries, the state would say, oh, well, this is a flag carrier, or this airline is important for our infrastructure, so we're going to support it, and we're going to put in equity in this, or otherwise subsidize this airline. You could do it by loan guarantees or direct loans. And this is happening in some countries. But in some countries, the states are taking more of a backseat. But this is expensive because you're basically putting in money just to make up for lost earnings. And the third level of medication is the enema, which is politely referred to as Chapter 11 in the US. This is when you go to courts and you do a court-supervised reorganization or restructuring, and your liabilities are marked to market, and the labor and the fleet is right-sized, and this is fully covered by shareholders who will take a bath, and eventually, if it gets deep enough, by creditors who will have to take haircuts. And again, it could be that you kind of recover temporarily, and then the crisis goes on, and you would have to then do more medication. So we don't know what the end of the illness is going to be and what the outlook is going to be. But I want to end this on a little bit more positive note. While I do think predictions are futile and only the virus knows how long this is going to last, I think that it is fair to say that air travel will resume because people love to fly. And at some point, the virus will blow away somehow, and we will return to flying on airplanes. Because I think we want to have face-to-face meetings, and we want to see different places and so on. So that's going to happen. And when that happens, at the backside, at the wake of this crisis, there are going to be great investment opportunities. Aircraft values are going to be low, airline credits are going to be weak, risk premium are going to be high. And because I don't think that residual values are going to be impaired long term, it means that economic depreciation of aircraft will not be as rapid as they maybe were before. So this is setting the stage for an absolutely great investment climate. And if you look back nostalgically to 2017, 18, 19, be fair, it wasn't the greatest market. It was so competitive. The margins were so skinny. And I think a lot of us were quite frustrated. Once we're through this pandemic, the trading conditions will be very, very promising. So I wish you all, the best health to you personally and to the organizations that you work with. And thank you so much for listening.
Nils, thank you very much. Or Professor Nils or Dr. Nils, a little bit of both. First of all, for the broader audience, we have a few minutes for questions. So please send in any questions that you may have to Nils. And I'll start this off. I have a few questions. One is clearly forecasting is often referred to as a fool's errand. Things can surprise us. But if you had to make a guess today, implications on aircraft values and aircraft finance post-COVID, similar to 9/11, which was the most severe crisis that the industry has endured in terms of value destruction, or worse, or more shallow? What are your thoughts contrasting the current downturn to 9/11?
Kostya, I don't really know. I think my main point here was that forecasts are very difficult to make because we don't know how this virus is going to play out. I think that at this point we are in a situation where if the virus goes away by the fourth quarter, I think we're going to be at par with 9/11. That's my guess. But I think that is maybe an optimistic prediction at this point. I read, like all of you read, about efforts to come up with a vaccine and so on and so forth. And, maybe we're going to be lucky and there is going to be a vaccine. But then the question is it going to be produced in big enough numbers?
We have a question that came in. Your view, values continue to decline or stabilize relative to what you were saying when the virus peaks? How would you look at, and how long does the recovery last? Is this a 3-year of values being significantly below, or and gradually adjusting to pre-COVID period, or step function?
I think that the pandemic is going to blow away faster than the weakness in aircraft values, and that is just because we have this inertia in the fleet. You're not going to adjust production rates overnight. The overhang of airplanes that need to be scrapped or retired will not happen overnight either. So I think there's going to be pressure on values for quite a few years to come.
Okay. And if you were an investor yourself, spending your retirement savings, would you be holding off in making investment decisions or jumping in now?
I think it's too early. But maybe there are opportunities. But I think you have to be very, very selective at the moment.
And by too early, what does your decision tree look like? You want to see greater clarity on the COVID resolution? You want to see greater clarity on production rates? All of the above?
Yeah, I think there are two things. One is to see where the virus is going. That's very important. But the other thing that also worries me a lot is the damage to the world economy. And there's one thing here that is going on at the moment, and that is that central banks are pumping in masses of liquidity into the economy to try to keep the economy going, and that could have all kinds of consequences on asset values and investment appetite. And this is a dark horse. I don't really know how this is going to play out. I don't know what's going to do to inflation. It's quite scary. So I'll wait a little bit to see first where the virus goes, and then try to figure out, where the economy is heading. But I have to tell you, I mean, I'm not the right person to ask because I've been a banker all my life. So I spend 98% of my time in thinking about what could go wrong in 2% of the cases, whereas an equity investor will have to spend at least half the time thinking about what could go right. And I'm not. That's not my personality. So don't ask me. I'm always very, very pessimistic.
Another question that came in from the audience is, how do you measure supply and demand? Do you use the IATA published data for the demand? Do you use the OEM's delivery numbers? Where do you get the data to essentially create that supply-demand curve that you talked about?
So I'd use IATA because they do a lot of research on this, and they talk a lot to the airlines. I think they have, a good view, but that view is only good for a short period ahead. And then the other thing you can look at is, what the IMF does in terms of world economy. Because if you look at the growth in world GDP, there is a kind of correlation to traffic growth. We talk sometimes about the traffic growth multiplier or the GDP multiplier, and we can look at the ratio between GDP growth and traffic growth, and that has been relatively stable over the years. And if you use the IMF forecast, you could use that as a proxy for traffic growth with that multiplier. But again, forecasting traffic is super difficult. I remember I did a long time ago a comparison. Ed Greenslet from the Airline Monitor, gave annual traffic growth forecasts, for 20 years ahead. And I looked at his forecasts and then checked against what, how accurate they were. And what struck me was that the long-term predictions, on average are quite spot on, 4.5 to 5.5%. But the error in the forecast was about the same 1 year ahead as it was 5 or 10 years ahead. So the ability to predict, the traffic in the short run is very, very limited. So I think the capacity is more easy to predict because of this slowness in adjusting production rates.
One of the questions that came in is balancing risk between an airline and a lessor. If an airline chooses the bankruptcy path, per one of the treatments that you were discussing, then the burden and the value destruction shifts to a lessor or a financier of that aircraft. How do you juggle those two? Does the airline is the business inherently more in favor of the airlines because of their ability to enter a Chapter 11, or ability to move the aircraft makes it favor the financier and investor like a lessor?
Look, I think that this is like dominoes. I mean, when airlines fall, the source will follow. And I think there is already a lessor that has gone into court-administered restructuring. And there may be others to follow. Some lessors have better solvency than some airlines, so maybe they're going to come out a little bit better. Who knows? And again, there are lessors that are owned by diversified big corporates or banking institutions that I think will come out without having to go through restructuring processes. But then the question is, what's going to happen to leasing long term? I don't think that leasing is going to be harmed as a concept. Maybe on the contrary, because I think the airlines will realize that owning all their airplanes is putting a lot of eggs in the same basket, and it's maybe a better idea to have at least some of the airplanes on operating leases, and that you can let leases lapse and not renew to adjust capacity almost at no cost.
Mm-hmm. A related question to that is the airlines clearly preparing for a relatively difficult time ahead, loaded up on a lot of liquidity, and another way of referring to liquidity is debt. And so clearly, the much higher debt load that the airlines are carrying will have implications on the businesses or aviation in general going forward. Your thoughts on it? Is it an insurmountable amount of baggage that's being added and the industry will be struggling for a long time? Or is this something that will dissipate relatively quickly?
Look, I really think that the raising debt and deferring rent is band-aid. It doesn't heal the patient. It helps you get by a little longer. But if it gets bad enough, I don't think there's any other way than to go through, either equity injections or a restructuring, which is going to be expensive for the creditors. Of course, there's going to be airlines that are going to weather through this because they have so much solvency, or they have shareholders that are willing to stand by them and inject more equity. But for a lot of airlines, I think that the restructuring is going to be inevitable.
Your views on how the industry may look in terms of financing different from what we saw before the crisis? More leasing, more export credit, more financing. It's the fact that the airlines are more highly leveraged. Does that mean that they'll lease more? Any outlook in terms of changes in how airplanes are paid for in the future?
Well, first, I think that the industry is going to be a little bit smaller initially before it grows back again. I think that some of the debt will be written off, unfortunately, for the creditors. And then I think leasing is going to thrive, because I think that this is going to be a prime example of where an airline having leased aircraft is going to be a great advantage over having ownership over the airplanes and suffer through the value drops.
Mm-hmm. In terms of longer term values, base values, do they change due to this crisis, or do only used aircraft base values change and the new base values remain stable? How do you see impacts on base values over the next several years?
I don't think that there's going to be a proportion of the fleet that is going to be taken out and permanently retired. But for the ones that's lived through this crisis, I don't see a reason to think that the residual values are going to be impacted, 7, 8, 9, 10 years out from now. I don't see why, because, it's really, what does it cost a manufacturer to build an airplane from scratch, right? And then they have to have some kind of profit margin for that. And that process is not going to change that much. And then I think that the values of airplanes will, adjust to that cost of making airplanes. And I see no reason to think that, a 2-year-old A320neo will actually be impacted on 10 years from now. I can't see that.
So the base values, from your perspective, stay stable?
I think so. I don't love the expression base value because planes don't trade at base value. I'm thinking like a cycle neutral CMV.
Okay, that's fair. A more specific question dealing with the OEM financing. In post financial crisis, there was a lot of talk about funding gap and not having enough liquidity in the market to finance airplanes. That proved to be incorrect. We had export credits step in for a year or two, and then we had broader markets being able to cover most of the deliveries where the OEMs had to do very little. Do you anticipate similar dynamic in the market, or do you think that this time it's different and OEMs may have to do more of the delivery financing?
Well, okay, I think there's two things here. One is, the export credit financing.
clearly, this is what export credit was meant for, right? At times like this. The question is, how many airlines are going to be wanting to buy more airplanes? So that's another question. But clearly, the export credit agencies will probably be very, very busy in the next few years. The other thing is the funding gap. This is economics. And so if you have a funding gap, it means that there is not enough supply of funds and there's no demand. And what happens then in economics is that the price goes up. So the financing is going to be more expensive. Margins are going to go up. Lease rental factors can be higher. And that means that there's going to be more investors attracted to that space and come in and invest. So, economics is beautiful because everything kind of evens out after a while. So this funding gap, to me, there's never a funding gap. It's just a little time needed to market prices to react to the economy.
Well, Nils, thank you very much for providing us the ammunition to think about how the economy will adjust and how the aviation market will adjust. With that, we thank everybody for joining us, and please visit ISTAT.org to see other events that we're organizing from ISTAT chats to additional learning labs. And with that, thank you all, and have a good day or evening wherever in the world you may be. Take care.